What's going on, guys? This is Baro, aka Invest Mentor. It's September 10th, Friday again. Thanks, guys. Friday, and it's September. It's like just after a blink. It's just towards the end of the third quarter right now. So and like so far we haven't seen any big problem in the U.S. stock market. And so once again, like before everything, we have to mention that this channel, like Baro Investment Mentor, the live stream, the short video here, totally created for entertaining, educational, informational purpose only without any financial advice. So please, I mean, no matter you want to trade stocks, invest in, real estate, whatever, be responsible for your own P&L and always do your own investment research and due diligence and be totally responsible for your P&L. Okay, so let's start. In today's live stream, so what kind of entertaining things we're gonna talk about? I mean, like as usual, we just gonna keep just like going through some of the major events of like global financial system with some focus in the US stock market. And so like it's September 10th, Friday. And I hope all of you have enjoyed the weekend. We'll have a fantastic weekend ahead. And so what's been going on like in US stock market recently? Like, we have been seeing like, record higher and higher. And last Friday, we just saw that we just had a economic, the labor market job report, which is kind of like disappointing. Just had much less than expected, non-farm payroll data. And so that could be, I mean, all of a sudden that could be, double-edged sword for a lot of investors. Like some investors thought that might be, just like short-term good news because like, the Fed will delay the taper. So like all of a sudden the stock just like, tick up higher. But a lot of people more investors would be concerned that the falling, the declining, and the damping job report, the job data might be signaling that that's what a lot of financial experts and economists have been talking about. The US economy is peaking in the third quarter, and it's about the end of the third quarter. It's September. So if the US economy is really peaking by the end of third quarter, what's gonna happen for the next? And the Fed, no matter the Fed will delay the taper or not, the taper will just get executed. Sooner or later, right? And probably no later by the end of this year. And so, is that really matter for the taper to take place in just in 1 month or in 3 months? That's a question. And so what just happened? Like this week we saw we saw the pullback of the cryptocurrency, Bitcoin, Ethereum, Dogecoins pull back really hard. And Bitcoin price is about like a 46,000 right now. It's below 46,000 because just the news the Salvador just government just their policy to put the Bitcoin in as a just a legit currency in the country. The thing, the project is just on rock. But is that, I was saying 60,000 for Bitcoin is definitely, let's look at the chart for Bitcoin a little bit real quick. Let's turn on the music. So thanks for some of the chat we have here. Yeah, Soda Cookie. Hi. Yeah, good morning, Michael Barry. And is it dangerous in this high? Yeah, I think just actually, I think just I'm not a super senior. I'm not a guru, but just based on my 2 cents and a lot of the wise decision and thoughts and the knowledge that I learned from a lot of those, just really, wise senior and guru. It's better to stay, to feel, it's better to feel dangerous every single day, right? It's better to feel dangerous like when, no matter when, where, what, it's better to feel dangerous, at a proper level every single day, right? Because we know that a lot of time, like even Warren Buffett, a lot of like gurus say, whenever the market is getting so greedy and so confident, that's about the time we have to be really, worried or concerned, right? Especially the market is so crazy, has been going so crazy, abnormally in such an abnormal environment. So do you think like, we just have to feel like, just worry and concern, right? No matter if it's still gonna keep going up or what. That's the thing. And a lot of time when we just like, started feeling too confident, started feeling too, satisfied or too greedy, that's just going to be the start and the trigger for the, disaster coming up, right? And yeah, I'm not sure if the music is like too loud or is okay. Please let me know if the music, if the video, if the screen is fine, it's good. Okay. So yeah, thanks for coming, Gamma. And when does it start? It's kind of annoying. Gamma. The suspense is killing me. What do you mean, Gamma? The suspense. What does it start? What's the start you mean? Please like specify more, and we can talk about that. And thanks for coming, Snowy Sophia. Yeah, you feel Gamma. So what do you guys mean? Snowy Sophia and Gamma. What do you guys mean? So I could tell, don't really know the direction. Market crash. Yeah, maybe it would be better to keep watch on the market, just like you said. Yeah, if we're as a trader investors, of course we're gonna, just like pay a good amount of time and attention in stock market financial season day after day, right? For example, if we have only if we have like zero investment, if we just have like, just like part of our assets in the cash deposit account, it doesn't really matter. But if we have like, more than like 10-30% of our entire capital in like some investment like stocks or bonds or like funds or ETF, even ETF. Even if we have like 10-30% of our assets in, the most, user-friendly asset ETF or, most like passive like investment assets like ETF, even if we have only 10-30%, we have to pay certain amount of, just effort and attention into the financial market and stock market like day after day, right? We have to follow what's going on for the, economy, for the US financial system, for the global financial market, what's going on in the developing country and emerging market, and just all the developed country and what's going on. So we can make some adjustment, and then we can improve our trading investment skills and experience along the way, right? Otherwise, we just got like, we will just got stuck there, and that would be a situation. I think a lot of people. Right. So let's come back to my trading system first. It's about the time the US market just opened. So let's see what's going on. So yeah, so we can see that so EFTR has been crazy. Like, just I searched for another 22% right now today. But definitely we're not gonna fall for that. We just watch the drama to see like what's going on. And this is just crazy, but this is like lottery gambling stuff. Like if you really got any insights, if you really got any insider information or insights or knowledge, I mean to make some profit from EFTR, I mean please let me know so we can I would definitely appreciate, I would definitely ask all you as my dad or like just a teacher and professor that this stock just like surged from 9 to like 40 in the past few days, but it's just the same thing. Like this kind of thing has been going on for a lot of the meme stocks, and that's also one of the very, very interesting sign we're going to talk about. What is meme stock? Like think about that. I mean a lot of the investment bank, even like Morgan Stanley just had a warning about the market might plummet over like 15% by the end of this year. And a lot of the financial, like just mainstream financial media and the financial expert and all that say they dare not like come up with the warning like from nowhere, right? They also mention a lot of the they also have a lot of evidence to support those evidence or data, those like from the history. And today we're gonna check into some of those. And to see, I mean, we are not saying the market has to be crashed, okay? Because I mean, you can see it's like a roller coaster ride. If the market is just like going to surge for like 10 times, I mean, and along the process, I mean, a lot of people will say, oh, it will be crashed. When it just comes to the second, and the 2 time, 3rd time, 5 time, 4, a lot of people will say crash. But in the end, the crash will, the really, really bad crash will happen only once. And that's usually about the time everyone just lose their patience and become like so naive, so innocent, say, oh, everyone's saying crash like for years, but the crash has never come. So let's get in, let's show hands, let's like put in all our money. And that's about the time for all those like corporate insider, for those like super wealthy people to reap, to crop, okay? That's happening over and over again in the past couple decades. And today we're gonna all right, so what's going on for the market? So like SOS is up for about 15%, and Tiger is up for about like 10%, and Baba is up for about 4%, and you would say like New Oriental Education is up for 3%. So JD.com, like Rito, so we see like some of Tencent Music, we see some of the Chinese stocks are kind of in a good rally today compared to the entire market. And let's see what's going on for the market. Just a second. And I mean, I'm totally fine and curious. A lot of people really hate Chinese stock, and it doesn't matter. In the end, it doesn't matter if you wanna take the risk or if you wanna make the profit. If you wanna, what you gonna do, right? What you gonna do? So, so S&P 500 is up for about like 0.53%. Dow is up for about 0.54%. And Nasdaq is up for about 0.57%. While a lot of Chinese stocks are surged like over 3 to 4% so far today. And we're gonna like later on we're gonna take a look into some like of the interesting article, and one of that will be investors are ignoring the parallels between stocks today and heady years of 1929, which is the big recession, in 1999, which is the year before the dot-com bubble, and 2007, which is the year before the subprime mortgage financial crisis. So we're we're gonna talk about what we can do and say by some of the strategists. Okay, so please check into some of the ticker first, and then I'll be right back. Right, sorry for the pause, guys. So, do we have any like more? Don't. So thanks for soda cookie. Don't really know the direction. Yeah, I mean we don't know the direction of the stock market for sure, but especially at such a just hypocritical like historical level. And Michael Barry, maybe it would be better to keep watch on the market, just like you said. Yeah, we're gonna watch on that every single day. Tapering. Do you have any insider information? No. I mean, I think like I used to mention like I used to work in financial industry in New York and Hong Kong for a while, but I have some connection experience, and like some of the time I talk to those like asset manager from private equity fund, from mutual funds, and some of the banking analysts. So I would say I have sometimes I have more insights compared to those who only read the news and make a guess, right? But I don't really have insider information. If I really have insider information, I wouldn't even tell you here, right? I would just try to make a profit by myself. But just kidding. I mean, I think insider information is not good. Although a lot of corporate insider, from the U.S. stock market, from Chinese stock market, from like over the world, like from Japanese stock market, European stock market, have been like making a huge amount of money through insider information. But that's not ethical. That's not ethical. I mean, especially, I mentioned about this like over and over again. I gotta speak about this. I gotta talk about this, like really, really seriously, and I mean, really sincerely. I mean, and from my true heart. I mean, like, once again, I think like through the time of disaster in 2020 and 2021, I know. Before 2020, 2021, I mean, every single one in the world has been, thinking about like how much money we can make, what kind of material life that we can live, but I think like after the disaster time of 2020 and 2021, I think we have to be aware of the true value of our life. Like, what's the true value? What's the real happiness? I mean, think about that. A lot of time, I mean, you're not gonna like feel. I mean, no matter how much money you make, no matter how successful you become, like what kind of power you control, you're not gonna. It's not certain you're gonna feel happy, right? But instead, like a lot of time in the past like couple of decades, we just forget about the true value and merit in our life. I mean, that's the relationship we can maintain and develop with our family, with our friends, right? And that's the married, that's a good relationship. That's the, we can help with our friends, we can help each other instead of like, just like step on each other's back and trying to take advantage of each other and make some profit, right? But that's been a vicious cycle. I mean, just running over and over again in the past couple decades, and that's not good. I mean, that's also the bad things just like circulating in like day-to-day life, and then in the capitalism, in the capital market, capitalism system and all that. So people are getting greedier and greedier, just like becoming like more and more selfish, and just like don't really care about the relationship with their family and friends and loved one, and just want to just think about materialistic things. I mean, it's not good. I mean, in the end, it's gonna be so painful. Right? So that's the thing. I've probably gone too far, so please just come back. So okay. So yeah. Oh, so thanks for Gan, Miss Gan. Like, hi, yeah, my day's good. It's Friday, and I hope you have enjoyed the week too, and hope you will have a good weekend. So like your neighbor sounds pretty enjoyable. Yeah, I have a neighbor. I have like a couple neighbor, and one of my neighbor is from India. I love Indian people. Indian people is always energetic and hilarious. They're more. Sometimes they like to go like comedy style, like a comedian or something. But it doesn't really matter. I really respect. Again, my friend, Indian trader friend, is really handsome. Next time if we got a chance, we can I will also introduce my Indian trader friend to be in front of the screen to have a chat with you guys, and yeah. And this day, later on also we can chat. My Indian trader friend is totally against China. He's totally against Chinese stock because, as you know, there's like the conflict, the dispute is not only between China and the U.S. but also the dispute is also between China and India, right? Why? Because that India has been a follower, has been a just a little brother of the US, right? So they have to co-op to fight China together, right? But that's a little bit too far. Let's see. So do you think US market will go down? How about Google, Amazon, Microsoft? Yeah, I mean, seriously, I'm not a super senior. I'm not a financial guru, and a lot of time I would just try my best to read a lot of information, do a lot of research, investment research, and kind of like organize those information into my own decision. And I think that's a risk. The risk is getting higher and higher right now, but it's not necessary for the market to crash just all of a sudden, right? The market, because the it's just like USD, like capital flooding in the US stock market. So for example, like when a hurricane come, when the flooding come, like can you be so sure that the disaster will end tomorrow, or like 2 days later, or maybe 1 week later? We're not sure, right? We are not sure. It's the same thing for what's going on for the US market. So I mean, this kind of like it's going to be a macro issue. We're gonna see, like, because like everyone is trying to hold tight, everyone is trying to buckle down to spare no expense, to like just like go all in. Like Biden government is doing that as well. The Fed chairman Jeremy Powell is doing that. But also like this week, one of the big news we see that like right here. this week we see like Dow Jones falls as Yellen gives this warning. Yellen this week just talk about the potential risk that what will happen if the US default. Why Yellen? Yellen, who is Yellen? Yellen was the Fed chair like before Jerome Powell, and Yellen right now is the the Treasury Secretary of the US, the US Treasury Secretary. Like Yellen is controlled all the financial of the US, right? So he's like worried what will happen if the US default on that. Why he's that worried about that? I mean, if he's like talking about this, I mean talking about the worry about the default of US national debt, I mean, we as investors or like whatever, we have to be really concerned and worried about that as well, right? And some of the Fed officials say are urgent for the tapering because they think the fucking economy like is that sorry for my swearing, the economy, no matter you just like no matter how much money you print, what will happen? That will only cause the worse for the disaster coming later, right? So a lot of the Fed official would rather to have the taper like earlier, right? Because that will be in favor of the most part of the American citizen, okay, instead of in favor of the small group of those super wealthy people, so the taper, the longer the taper lasts, the stronger the taper go. No, sorry, the later the taper come, the worse every American will have to go, will have to suffer, right? So it's going to be a painful process, but we just have to go. And so let's see. All right, so back to the point, like Google, Amazon, and Microsoft. I think, and it's not only based on my thing, it's said by Warren Buffett and a lot of the investors that we have been talking about fan stocks, but why we talk about fan stock is not only because fan stocks are just popular, household name, well-known company. It's also because there are more like COVID-19 resistant. They're more like pandemic proof, right? Because they're more like e-commerce and internet or things kind of company. So they can, they're not afraid that much of those like the pandemic of like COVID-19 Delta variant, right? So we can see even like in the past 1.5 years, despite the Delta variant, despite the COVID-19, all the fan stocks like surge over and over again. It's not only because of the money printing policy, but also because of their business model and their innovation and the management and the quality of management of their quality of their management team. Okay, so I think like Google, Amazon, Microsoft, I was not so sure, to be honest. I will pay more attention to the detail to research for that. And recently I was saying Google and Amazon, but right now like earlier I was kind of just not much into like Apple and the Facebook right now. This month, hopefully it's not too late. I totally changed my mind. I think like Apple, especially Facebook, is so strong. Facebook is so strong. Let's see. Okay, Facebook is crazy. Okay, Facebook, like Mark Zuckerberg is is a genius. It's genius. Okay, see, please check into how beautiful the stock chart of Facebook is, started from March 2020. I mean, the stock price of like Facebook, I searched almost like, has like, it's like jumped almost like 3 times. It's about like a 280% of increase in the past 1.5 years. Okay, and despite the consolidation in the third and fourth quarter of last year because of the because of Apple just had a change about their privacy policy that might affect like Facebook's advertising income a lot, but Facebook just overcome that. And also in the end of last year, the US government just had an antitrust investigation, antitrust cases, antitrust lawsuit against Facebook. But it seems like Facebook is afraid of nothing, because think about that. I believe like almost 99% of you, the audience in front of the video, has been using like Facebook, and the time you use Facebook probably just increase, right? And probably like you can feel. I mean, if you spend a good amount of time on Facebook, you probably can feel like what's the change has been. I mean, what's the change has been going on for Facebook, right? They just have like more and more function into more and more different categories with like all the different like business model to increase and expand their advertising income. That's a major thing. That's a major thing for the growth of their business model. And please check into some of the major tech here. And today we're also gonna talk about a little bit about Intel. Okay, so please give me a second now. Alright guys, sorry for the pause again. So what's going on? So thanks for all the comments here. So once again, I think like back to the question, I think like FANG stock, FANG stock, like Facebook, Amazon, Apple, Google, Netflix are definitely the king, especially during the time of the disaster, especially throughout in the pandemic. I mean, these type of stock are not only household name or not only well known, like popularly traded, but also they're good target for us to do hedging, because once again, if the stock market crash or just stagflation really come, I mean, these type of stock will be relatively more, crash or correction proofed. Okay, but I'm not saying they cannot go down, but the level and how much they can go down will be much more limited compared to a lot of the other growth stock. Okay, and while these type of stocks are value stock and growth stock, like all together. Okay, so later on we have time, we will also, this day I also come up with a short video about like Facebook and Intel. So later on, if you have time, please check into that. And we can see like Intel, I was going to say, like you can see like Intel has been like struggling in recent year. And what just happened to Intel? Because of the Intel, like we know, I mean, in our memory or like image, we thought like just most of the chips, right? The chips, the CPU in our cell phone, in our computers, or Intel, right, aren't made by Intel. But like things just got changed in recent year. We can see like how bad like Intel, how bad like the situation Intel just facing .com bubble in 2020. But that's, we should just cut through this. Intel shouldn't just have this Intel, just like if we for example, if we have like Intel, just shouldn't even have like this part from like 2000 to 2008. It would, to be more realistic, instead of like in the illusion of the .com bubble, we should just like smooth the line from here to here. And but right now I think like it's just way too over. Otherwise it should be just like from here just keep going up. Maybe it should be around like a 30, 34 something and keep going up. But right now maybe it's kind of like too much because of the potential froth, the potential bubble. But let alone the potential bubble, okay? If like if it's a bubble, if it's a froth for Intel, it's gonna be a bubble and froth for like every other stock as well. And the things I'm talking about Intel today is I was going to compare Intel with like AMD, Nvidia, because like you can see like Intel's like a P ratio right now is like 11 times P ratio. And why Intel stocks like suffer? You can see it's being a really just a consolidation like since like 2008 because of the manufacturing issue. Okay, because probably maybe I don't know, the previous CEO couldn't manage the company really well, so there has been a manufacturing issue and delayed in production. So that's how Intel stock just got like wrecked. Okay, and that's how, because of the change, AMD and Nvidia just like they just went crazy and at the expense of Intel. And we know that like Intel's like CPU market share just like go down from like 77% to about like just over like 60% right now. But think about that. That's a decrease for about like 15%. It's about like from 77 to about like 61, 62, right? So it's a 20% cut for from the standpoint of Intel, right? So what? Intel still has like like more than like 60% of the entire market share of like CPU, the chip manufacturing market. And and still the number one, still the top. And so think about that, like they just got a new CEO, Jeffrey, and if the new CEO can really make a turnaround and come back of the company to just like improve the management and all that, because and also we can see they already have all the fresh new contract policy and the procedure with the the semiconductor manufacturer, the Taiwan, the TSMC, Taiwan Semiconductor Manufacturing Company, to have the production in this year and next year. And also they just have a new investment for the foundry in the US in the coming years. So if the improvement really happened for Intel, and we know it's not really bad for Intel right now. I mean, the future outlook still so promising for Intel, right? Isn't it? And I mean, so compared to like AMD, we just talk about that. We just talk about that like recently, like when AMD just like surge, to break out all the way through like $95. I was saying, oh, it's I was not sure. It's really technical. It's really an industry, is sector. We're gonna pay it off. Effort to do the research and investment research, and then it's pulling back. It's pulling back in a consolidation right now, and we're not sure what's going on. But for me, like personally, I'm not going to buy like AMD and Nvidia right now, because I think the price might be a little bit too high right now. And maybe, for example, if I for AMD, I would expect the price to come back a little bit to test the previous resistance around like $210. If we come back to test the previous resistance, and then I will enter at around this level at $210. Otherwise, I will just stand by and observe. And it's the same thing for AMD. If the price is like just like pull back to test the previous resistance around like 95, 96, then I will enter at a level around here. Otherwise, I will just stand by and observe. But for Intel, I was saying, it's relatively, we got like Intel just like surge over like 2% today. And so if we can see right now, like Intel is like struggling to challenge the the resistance, the downward slope in near term. So we can see if we can flip above this like short-term resistance, and stand above it for like 3 days in a row. But right now I'm more bullish for Intel. Okay, it's for Intel, even if you just had a short-term trading, I think as long as the price doesn't just don't go down below like level here, like a 51.4, I think it would still be good to stay bullish in the short run. But I mean, that's for short-term trading, right? If you want to do swing trade for like a few days, like a couple of weeks. But I mean, for the long run, if you want to, when you have a good amount of money to invest for the next 1 to 3 years, I think like Intel would be a good target to go, because of the P, because of the fundamental. Even like Intel can become a like meme stock anytime, right? That's one of the perfect, like brilliant target for all those like meme stock retail investors, right? Compared to ANC, GME, and all that, right? And Intel, I think Intel can go crazy anytime from any aspect, by any support possible. So I think Intel is I mean in the short run, I mean as in the short run, I mean other than day trading in the next 12 months, if you good, a lot of people, I mean we can see I mean this is more like rational, logical, like analysts from those Wall Street analysts. So like almost like half of them are saying to hold, but the upside potential is still about like $85. So it's about like how much? It's about like 60% upside potential, right? 60% upside potential with it's paying like 2.5% stable dividend, annual dividend right now. So and the downside risk is really limited. It's like 40. So I mean, for those, I mean, it's a conservative play. It's a conservative play. Yeah, I mean, just for, I mean, again, right? We will always have for trading investment. We will always have like 3 major strategies, right? So we will have, conservative strategy. We have like steady strategy. We have aggressive strategy. We have conservative, steady, aggressive. Conservative, steady, aggressive, right? No matter for trading investment, and no matter for trading investment, Intel would be a play for conservative right here. Okay, think about that. The upside potential is good. It's not, of course, it's not crazy. It's not gonna be like 100, 200, 300 times, but it's good. And the downside risk is really limited. Okay, in terms of the entire business profile, market capitalization, the P ratio, the market share, and the business background and all that. Okay, think about that. Sorry, I've been like spending too much time on Intel, and I was going to talk about this, and also like today I was also gonna talk about something like okay, we can see we saw like Chinese stock has been crazy, like going up and down, and a lot of people, even my Indian friends, saying, oh, fuck Chinese stock, and then I was like, yeah, fuck Chinese stock, but what if like Chinese stock can really make you making some money? And then I was like, today, recently, just a lot of financial experts and guru keep saying, oh my god, it's like you can see BlackRock, because Soros, Soros is, I forgot his full name, but it doesn't really matter. Soros is just the big, just like speculator, recently fund manager. That BlackRock defies Soros warning and breaks new ground in China. In recent months, recently, BlackRock just set up first, just a wholly owned foreign company as a wholly owned asset manager in China, and started selling products in China, started having fund manager to invest in China. That's how BlackRock, the top asset manager in the world, is doing right now. And we also gonna talk about that, like another one, like a Ray Dalio, the Bridgewater hedge fund, the CEO. Oh, he's being a pro-China fund manager. He's saying a China opportunity cannot be neglected. Look at this guy. Look at BlackRock. So I'm not saying like Chinese stock are going to make you super rich right now, but that could be an alternative for us to hedge, for us to do the rebalancing and portfolio management, risk management, while the US stock market is so risky right now. And why it is so risky, we're gonna spend more time. We're gonna talk more. Morgan Stanley warns of 15% plunge before year end. So protect yourself this way, okay? Morgan Stanley is saying about the crash and plunge, okay? So You know, we can see like pandemic caused huge disruption with shift to e-commerce. That's how we have all the e-commerce and internet of thing giant, the fan stock as a hedging. So that's why I'm not like keep like distracting my audience to keep like introducing a lot of meaningless, like helpless stocks, right? I'm not gonna just like talk about like hundreds of like dozens or hundreds of like tickers or stocks to dizzy you, okay, to confuse you, okay. I mean, I think at at such a time we have to stay focused, okay. We have to stay focused. That's the thing. And please, like, look into what's like 1 2 3. Look at how we are similar to those like time of disaster in like 1999, 1929, and 2007. Think about that, and I'll be right back. All right, guys. Sorry for the pause again, and the time fly. It's about the end. We're gonna close. Very soon, and but before that, I think we have some more chat here. So, yes, Snowy Sophia. These look crazy, and these candles are wow. Michael Barry, what's going on today? It's almost all in green. Yeah, so I'm a long all then Sophia, so you long all what? And lucky you, Sophia, lucky you bought what stock you have been buying, and you're in green, you all in green today. So Soda Cookie, like Microsoft plan to raise their Microsoft 360p price 365. That 75 resistance is going to be there for sure. Gamma, what do you mean by the 75 resistance? Please let me know more so we can talk about that. I wouldn't chase it. Chase what? Agree. And Snowy Soviet, so waiting for you to come back and loan all of the stocks that are up today. What do you mean? I mean, Snowy Sylvia, you long all of the stock are up today, so you long a lot of Chinese stock, like a lot of stocks are up though. A lot of stocks are up. I mean, what's going on right now? I mean, the US stock market just like come back to about around the flat. S&P 500 is up for just about like 0.03%, and Dow is down for 0.17%. Well, Nasdaq is up for about 0.3%. But and I mean, reversely, we're seeing a lot of Chinese stock like up fintech SOS, and what's that like Baba. and the JD.com 360 digital tech are like surging over like 3, 4, 5% a day. And so what's the stocks like Sylvia you are buying? Like, please let me know, we can discuss more. But like before that, let's before we close it, let's try to figure out. Okay, this is really important, guys. This article, although it's from Market Watch, which is not that much of mainstream media, but think about the guy, what the guy is talking about. As usual, I always copy and paste these like important and interesting article in the description box. So when you have time, please check into that. Okay, so let's check into this. Okay, because the investor, the guy is talking about, is making a comparison of like today US stock market compared with the those day in 1929, which is the big recession before Second World War, and 1999, the year before dot-com bubble, and 2007, the year before subprime mortgage crisis. Okay, and the guys like just like kind of like articulate, demonstrate into some of like similarity we have compared to those years. Okay, you can see here's the list of similarities. Look at this. The S&P 500 is trading at a lofty 22.5 times forward earning and its PS ratio of 3.1 times is far cost higher than in 2000. Okay, and the Nasdaq 100 tracking QQQ exchange traded fund is trading at 70% premium to its 200-week moving average, the biggest since 1999. Okay, the biggest since 1999. So let's look at the index. Okay, let's look at the index. Okay, you can see the index has been up like 70% above the 200-week moving average. The biggest trap, that's the biggest streak since 1999. Come on. And okay, so back to so blank check. This year we see a lot of like SPAC back company, right? That's like blank check or special purpose acquisition company where investor have no idea what the investment will be. The last time SPAC company were as big as they are today, that's right, 1928, 1929. That's just the the time before the big recession. Okay, and also we can see what about leverage highs similar to 1920 and 2000. Margin debt has shot to new highs, which is fine until it starts heading the other way. Okay, the US government, the corporate can keep like borrowing money. That's fine until it's heading the other way. Okay, it has recently started to unwind, and if that keeps going, market have fun. Okay, so we have some more like similarity here, like cryptocurrency frenzy. Individual investor make up 20% of the average daily trading volume here right now. That's what happened in those days, 1929, 1999, and 2000. Okay, and like right now nowadays we have like meme stock, but before in the history we didn't have meme stock. But you can see from 1999 to 2000, lots of companies with zero earnings, so shares shoot higher, investors pile in, and the analysts say parallel. That's so-called meme stock we have today, right? But we have a lot of these type of stocks in before the dot-com bubble. But back to those days, we didn't call that meme stock yet, right? Because we didn't have that much convenient and sophisticated internet network yet. That's just the thing. Government, corporate keep borrowing money, and people just keep like going crazy and pouring money. And individual investors just keep like amassing, pouring their money into the stock market. And we have like so many different weird and odd, trading investment assets in the market. And also, the P ratio is weird. S&P 500, Nasdaq index are weird. And also we have the blank check company like back company. So that's all the similarity. And also, in the recent live stream we talk about that. You can look at these. I think you okay, this is Yahoo Finance. We're gonna close after this. Okay, so this Yahoo Finance is very user friendly, and you can have all the historical data. So I just wondering why a lot of people say, oh, why are you using Yahoo Finance? I was wondering, like, what the fuck are you talking about? Yahoo Finance is one of the most user friendly financial sites you can use. Especially for a lot of beginners. Okay, so okay, so in this chart we can see like the US stock market for S&P 500 just started in 1928. Okay, so in the first 60 years we thought that was a flat, right? But actually not. If you pull really close, see, that's what happened at the beginning of the US capital market. In 1928, before the big recession, the stock market was the S&P 500 was started at around 17 only, and then surged over 30, and that was a big enough surge, just 100%, right? So at a time, like 100% of increase was already so fantastic enough, and then the market just crashed all the way from above 30 to just like 5. So that was 80% off, right? And then the US stock market just spent like over 20 years to recover. Okay, but that's in the history, so we cannot use it to compare what we have today, of course. But that's the first big financial crisis we have in the US capital market. Okay, 1930, 1929. Okay, the big recession. Why it's big recession? Because they just fucked up. So, and then at the time we didn't have enough knowledge and all the tool and technique to fix the economy to make it recover. So we just spent 20 years to make it recover. Okay, and then after that, the market just keep going up from 1955 all the way to 1975, before 1985 to 1975, before it just went to another period of crazy surge. You can see the market was really crazy after the fight between US and Japan. In US and Japan just had a fight in 1980, 1990, and after that the US stock market just went crazy. And we know that if you look into the debt ratio, US market just started raising higher and higher of the debt, national debt and corporate debt since 1980. So the stock market just go crazy all the way to dot-com bubble, to make the dot-com bubble. Remember the shape of what's happened in 1929. Remember the shape here, and remember the shape in dot-com bubble here. Remember the shape. and what's the pullback. And 2008, we have like 2008. Remember the shape. And okay, we have that like 2008, 2008 and 1929. And what's the shape right now? So you just have to think about the shape. Think about the ratio. Think about the figures. And you're probably still gonna tell me, oh, like everyone is still saying about a bubble crash, but it's not coming yet. So we're gonna keep like investing, pouring money, like whatever. So if you're gonna say that, that's totally fine. Yeah, but I mean, to be honest, I really hope that all of you guys can make some money, can stay stable with your financial and investment, and really have good relationship, happiness with your family and friends and all that. So what I have been trying to do is trying to find some good way to invest and hedge and do risk management, instead of like keep talking shit and selling you some trash and garbage. Okay, so I just gone over time again. So thanks for your time and watching. It's Friday, September 10th. So we will have more about the US economy, the global financial market, and US stock market, and know that in the next one. So thanks for your time and watching. So we will have more in the next one. Have a nice week.